Welcome back to Market Fatafat on 18 now, and let's keep it going with all the buzzers in trade today. But before we highlight the next counter, let me welcome Arpit Beriwal, who is joining us on the technical front from Motilal Oswal to highlight all the counters that are looking attractive on the technical front. Hi Arpit, a very good afternoon. But before we come to you and know your first stock, let me just quickly highlight what's happening with Ircon today, because it was indeed one of the earnings candidate then, and not a great set coming in for Ircon, and hence you can also see that the stock is down in trade today. The revenue has seen a decline of 19% on a YY basis. The EBITDA too has seen a decline of 23%, while the EBITDA margin was also down from 8.6% in Q2 FY24 to 8.2% in this particular quarter, and the net profit also slumped around 18% on a YY basis. Across all the parameters, it was a bad set coming in from Ircon, and that's why we are seeing a decline in today's trading session and no significant recovery, I would say, from the lower levels for now.
Okay, so Ircon International is stock that's deeply under pressure, and let's move on then. And Arpit, will come to you for your first stock, and that's Divis Labs. Now on the charts, the last 6 months are looking pretty solid, a 50% return coming in. However, we've just seen a 7% return coming in over the last 1 month, so it's slowed down slightly, tapered down a bit. But if you take a look at the longer term charts, the stock has managed to do pretty well for itself. So what's the outlook going ahead, and what are the next levels that you are spotting for Divis Labs?
Very good afternoon. So if you see, overall pharma pack has been quite resilient. So overall market has seen a tremendous fall in last almost 40 days, but pharma selective stocks has been outperformer. Within that, Divis Lab is a preferred pick within the pharma space. So if you see technically, the stock is in strong uptrend on the monthly scale. The structure of higher lows is intact from past many months. On weekly scale, the base of the stock is shifting higher. On daily scale, it has been consolidating between 5800, 5900 zones. However, the base of the stock is shifted higher towards 5600 zones. So if you see, overall the base of the stock is technically in a strong uptrend, and it is also trading about short-term moving averages. So within this space, I think as soon as the pharma index gets its mojo back, I think Divis is likely to scale to new record highs. So one can continue to go long at this counter in the range of between 5900 to 5920 levels, with keeping stop loss of 5650 for an upside move towards 6100 and then new life high towards 6300 levels.
Okay, on that note, let's keep it going with all the stocks. And Jinay, you've picked out GE Shipping for us. Tell us why the stock is in focus, and it's an earnings candidate, so take us through the earnings fine print as well.
Well, definitely GE Focus is in focus. Currently, it's actually trading down by 6.5%, 6.8% to be accurate. If you look at the earnings, then the revenue did show a growth of 10.2% coming in at 1354 crores versus 1229 crores year-on-year basis. And net profit was down about 3.2% year-on-year basis, coming in at 576 crores versus 595 crores. But operationally, if you look at, then there was a set of a weak performance, because EBITDA just improved by 1.6% at 654 crores versus 643 crores. But the margins, if you look at that, there's a big 4% drop coming in at 48.3% this quarter versus 52.3% on year-on-year basis. So margins were the key focus highlight concerning for GE Shipping. Apart from that, if you look at segmental performance, then the shipping revenue grew about 7% year-on-year basis, where the offshore segment grew by 14% year-on-year basis. But the state is penciling in the margin concerns going forward, and that is why GE Shipping will be in focus.
Okay, Janai, thanks for taking us through that. That stock not managing to stay afloat in today's trade. But let's refocus, talk about a stock that's doing pretty well for itself, and that is Sterlite Tech. Now, the company has emerged as the lowest bidder for a project worth 1,625 crores for the development of the middle mile network for Bharat Sanchar Nigam Limited, which is the BSNL. As per the project, the company will develop the middle network of the Bharat Net on a design, build, operate and maintain model of package 13, which is in Jammu and Kashmir. The contract involves 3 years of construction and 10 years of maintenance at a rate of 5.5% per amount of capex for the first 5 years and 6.5% per annum capex for over the next 5 years. A similar deal we heard coming in for Polycab also yesterday, which was doing pretty well. And you have Sterlite Tech also that's holding to gains of more than 4% as we speak.
Alright then, but moving on and shifting focus to another stock that is not having a great day, and that is NHPC, one of the earnings candidate, and not a great set, I would say, coming in for NHPC, because though the revenue has seen a jump of 4% on a YY basis, but it was the net profit that has seen a sharp knock of 41% decline on a YY basis, and just 909 crores is what the company reported in Q2. EBITDA too was also seen to be flat, but the margins did see some bit of a hit coming in, 138 basis points of decline on a YY basis. So NHPC, not a great set coming for the company this quarter. Seen a decline of 3%, but do watch out for the management commentary. 3:30 is the analyst con call, so we will wait out for how the company is sharing the outlook for the times ahead. But for now, NHPC is seeing a bit of a decline.
Okay, NHPC also under pressure, 2.7% lower as we speak. Arpit, you've picked out Persistent Systems on the charts. Now, it's been a steady performer, and year to date also the stock is up more than 50%. Tell us what are the levels that you are spotting ahead, as well as if you expect the stock to continue this upwards momentum that it has built for itself.
If you see overall the market structure, and if you see overall Nifty IT index has relatively outperformed, and if you see in spite of market fall, Nifty IT index is marginally down. Within that also, mid-cap IT stocks, especially Coforge, Persistent, have really been outshiners and shining like and trading a life high entries. So technically, if we see the structure-wise, as rightly said, it is in strong uptrend on the monthly scale, on the weekly scale. On the weekly scale, the base of the stock is shifting slowly, gradually higher. On the daily scale, it is perfectly respecting to its 50 DEMA, and again and again it's bouncing from that zones. That clearly indicates that buying is visible at lower levels, and the trend of the stock is in strong uptrend. So I think going forward also, as we see IT index is quite strong, and a couple of months also, if we see the view, the strong bias is likely to continue. So technically also, and from a structural point of view also, it is in strong uptrend. So Persistent would be a preferred pick within the IT space. One can go along as current levels or minor dip in between 5650, 5670 levels, with keeping stop loss of 5450 for an upside move towards 6000 and then 6300 positionally from here on.
Alright, that's about Persistent, but moving on then, and Junai, take us through what's happening with Coachn Shipyard and what's the news flow here.
Coachn Shipyard is again focused on a back of another earnings candidate. So if you look at the revenue, it did grew by 15% year-on-year basis, coming in at 1097 crores. But if you look at operationally, then the EBITDA remained flat at 196 crores versus 195 crores on year-on-year basis, whereas the margins saw a downtake of about 2%, coming in at 18% this quarter versus 20% year-on-year basis. So that's something to look out for. And if you look at the net profit, again that remained flat, seeing a 2 crore improvement, coming in at 193 crores this quarter versus 191 crores year-on-year basis. So again here the operational efficiencies remains under a main concern for Coachn Shipyard. Now apart from that, the company has also declared an interim dividend of rupees 4, and on back of that the company will remain in focus. If you look at the stock price, it's currently seeing a downtake of about 5%.
Okay, that stock continues to be in pressure despite an uptick in revenue and profit on a year-on-year basis. But let's move on, and Arpit, you've picked out M&M, which is yet another techie favorite, if we could call it that. And fundamentally, the stock looks good on the back of very strong Q2 earnings. But tell us what the stock is looking like to you on the charts, and what are the levels that you are spotting.
If we talk about M&M, before that I'd like to talk about the auto index. If we see auto index has corrected massively in this downtrend. However, if you see M&M also was in strong uptrend, but last couple of weeks the stock corrected from 32 levels to 2700 levels. If we see on the weekly chart, it has a strong base formation near 2750, 2700 zones, and the stock has rightly bounced from that level. So I think even if you see the overall auto SPAC, it has been underperformer, but M&M has been outperformed within the auto space. So technically it is the strongest, strong base formation near 2750, 2800 levels, and the risk reward is quite favorable because slowly, steadily, we can see an up move towards 3050, 3150 levels back to its previous highs. So M&M would be a preferred pick within the auto pack as it's near its support zone and turning from its lower levels. So one can go long at current levels or minor dip in between 2920 to 2930 with keeping stop loss of 2820 for an upside move towards 3050 and then 3150 levels.
All right, that's the technical take coming in on M&M. But with this, we also spoke with Anish Shah, who is the Group CEO and MD of Mahindra Group, and he says that M&M's EV will stand up to the best in the world and will redefine how the consumers look at the EVs. Let's go across and listen into him.
EV is an exciting new product, and the products that we've developed will stand up to the best in the world, and that's something that you will see in a very short time. We already have outlined the teaser for our launch, which is on the 26th and 27th of November. And we feel that this product, the set of products that we have for electric, will really redefine the way people look at electric vehicles.
Okay, that's the word coming in from the management of M&M. But on that note, we'll slip into a very short break and keep it going with more stocks just on the other side of this break. So you stay tuned. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are buzzing in today's trade. And next up, we wish to highlight SAIL today because that stock is deeply under pressure. More than 4% lower is where the stock is trading right now on the back of a set of numbers for Q2 that were way below what the street was estimating. Sales volumes has come in at 4.1 MT, which is down 14% on a year-on-year basis. The EBITDA per ton has also come in at rupees 3,112, which is down 30% year-on-year, and also the sequential dip of 44% coming in. Lower realizations have impacted performance. The realization has come in at just 56,191 rupees per ton, which is a slip of 4% year-on-year and 6% sequentially. The net debt has risen to 40,000 crores compared to 35,700 crores at the end of Q1. So there's a sequential uptick coming in the debt figures as well. And on the back of these weak numbers and the total debt of the company also going up sequentially, the stock is deeply under pressure. 4.2% lower is where the stock is.
All right, that's about SAIL, but moving on then, and let's also put the spotlight on NALCO. And Arpit, take us through how you're looking at this counter on the charts, because it did start the day on a very strong footing, but it did reverse in today's trading session on an intraday basis as well. So how are you looking at NALCO then?
If we talk about overall metal index has been quite volatile, and it has been trading in a broader range from last couple of weeks. Within that, if we see NALCO, however, the stock has been quite outperformer. So if we talk about it technically, the stock is in strong uptrend. It gave a range breakout on monthly scale after almost 4.5 months, 4 months above 220 levels, and on the weekly structure, the structure of higher lows is intact. So on daily scale, the stock has pulled off from higher levels. However, if we see the bigger term trend is very strong, because today the market is down. Broader market, mid cap and small cap is marginally down, almost 0.8%, but stock is relatively still stable. So if we talk about this setup wise, it has multiple support near 225, 220 levels. That was a previous breakout zone. So from an immediate basis, there could be some cool off, but from a positional perspective, the stock is a buy on dip stock. One can go long in between 228 to 232 zones with keeping stop loss of 220 for an upside move towards 255 and then 265 levels.
All right, that's about NALCO then. We're moving on, and let's also put the spotlight on Ashok Leyland then, because just a while back the numbers were out for the company, and it was indeed a good set, and the numbers did beat all the parameters and all the estimates as well. The revenue has come in at 8,768 crores, and the profit, though it did had an exceptional gain of 117 crores, but even adjusting to that, the profit figure was higher than what we were expecting at TT now. In terms of the margins as well, we were expecting some bit of a blip on a sequential margins, but this time the company did come out with a surprise, in 11.6% is the margin is what the company has reported. In terms of the management commentary, that is seen to be on the positive side, and it's Mr. Shenu Agrawal, MD and CEO, who is saying that they are well on track to achieve the mid-teen EBITDA in the medium term. So on all the parameters, great numbers coming in from Ashok Leyland, and even the management commentary is seen to be supportive, and hence you can also see on an intraday chart there has been a spike on the stock price as well just after the earnings were reported.
Okay, so that's positive news flow coming in on Ashok Leyland. Stock also reacting slightly to that news flow, mild uptick coming in. But Arpit, you have picked out Federal Bank for us, if I'm not mistaken, and tell us what levels you are spotting on this stock because in the morning also our in-house techie also flagged this off as a good buy opportunity. Do you agree with the same, and what are the levels that you are spotting?
Relatively it has been the outperformer because banking as a whole, if you see, hasn't fallen much. Within that also, private banks, mid-cap banks, if you see, Federal Bank has been a huge outperformer. Technically, it is trading at life high territories. On the monthly scale, it has given a range breakout above 185, 190 levels with a strong hammer kind of pattern that clearly indicates that buying is visible at lower levels. On daily scale also, it is managing to hold above 200 levels. That was the previous hurdle zone and is on the verge of range breakout after almost 15 weeks. So I think overall setup wise, the stock has been quite outperforming within the banking space, and likely as per the setup wise, it is likely to scale new record highs towards 215 to 22 levels. So Federal Bank would be a top pick within the mid cap private bank space. With one can go along at current levels with keeping stop loss of 195 for an upside move towards 222 and then 230 plus zones from a medium term perspective.
Alright, that's the day coming in on Federal Bank. But Jinay, take us through the update coming in from RVNL then, and why the stock is in focus today.
Well, RVNL is in focus on the back of the results. Well, a poor set of numbers coming in. If you look at revenue, it's down about 1.1% year-on-year basis, but the net profit has taken a toll and down by 27.2%, coming in at 287 crores this quarter versus 394 crores last quarter during same period in year-on-year basis. And if you look at operationally as well, the EBITDA is down about 9%, coming in at 471 crores versus 498 crores. So there's an operational fall in EBITDA and margins, as well as the margins were slightly lower, coming in at 5.6% this quarter versus 6.1 quarter during the same period last time. Apart from this, the company's total order book currently stands at about 92,000 crores, and the company is confident on achieving their guidance of 22,000 to 23,000 top line for FY25. But if you look at the stock price, currently it's taking a toll and down about 6%.
So Real Vikas is deeply in pressure today on the back of a weak set of numbers coming in. But on that note, let's also talk about another stock that is facing the heat in the market today, and that is GSPL, which is Gujarat State Petronet Limited. Now, when you take a look at this Q2 numbers, then on the standalone sequential basis, revenue was coming at 258 crores versus 354 crores, which is a slip of 27.2%. Net profit is also, net profit in fact has gone up sequentially, 83.6% uptick coming in on that stock. If you could just have the intraday stock of GSPL on air, we'll get to know what the stock is doing right now. And EBITDA has seen quite the slip coming in. 36% intraday is where the stock is, where the number is lower. EBITDA margin also at 74.8% versus 84.9%, which is down more than 1,000 bips coming in on a sequential basis. So quite the fall coming in across operational metrics when it comes to this numbers, except the net profit. But the street is also reflecting this poor set of numbers. The stock is lower by 2.5%. We also have Motilal Oswal's view coming in on this stock. They've reiterated their neutral rating with a target price of 415 rupees per share. They say that lower than expected volumes and tariff have led to the EBITDA miss coming in this time around, and they believe that the company could post a 7% CAGR in transmission volumes over FY24 to 27. But for now, the stock is under pressure, 2.5% lower as we speak.
Alright, then that's about this GSPL. But moving on then, and Arpit, take us through how you're looking at the numbers, how you're looking at Oberoi Realty on the charts then.
Reality space has been in a broader range, and as the market texture is, selective pockets are seeing buying action. However, the broader market advanced decline ratio is clearly in the favor of bears. However, few selective stocks has been outperforming, and that clearly shows the price action also. Within Reality Pack, Oberoi Realty is in strong uptrend. On the monthly scale, it gave a range breakout above 1940, 1950 levels after almost 4 months, and on the weekly scale also, the follow buying was seen. However, in daily scale, it has consolidating from last couple of days. But as we see, in spite of market weakness, the stock is trading at life high territories, and originally we can expect a good 15 to 20% rally from current levels. That is view of 2 to 3 months. On immediate basis, till it holds above 1900 levels, that is a major support zone. The stock is likely to inch higher. So overall, relative one can go long at current levels with keeping stop loss of 1900 for an upside move towards 2250 and then 2300 levels.
All right, then that's about Oberoi Realty. But with this, let's also put the spotlight on Vedanta then, because the numbers are flashing on the bottom of your screen. And this time around, what the company has reported is the revenue has come in at 37,634 crores, and that's actually a little above than the street estimates. The consolidated profit has come in at 5,603 crores, and that too is a sequential jump. Other than that, if we look at some of the other internals, then the EBITDA has been recorded at 9,828 crores versus 9,944 crores in Q1 of FY25. And margins, that's the number that has seen a bit of a decline, because though there has the revenue has seen a jump, but the EBITDA has come in line, and that's the base effect that we are seeing on the margins. 26.11% is what the company has reported in terms of their margin figure. And if I just broadly look at the estimates as well, then that's a mixed set of numbers coming in from Vedanta this time around. So that's the update from the Q2 numbers. But with this, viewers, we are completely out of time in this edition of Market Fatafat. Thank you so much, Jinay, as well as Arpit, for taking the time out and highlighting all the buzzers in trade right now. But with this, me and Snehi will also take your leave. Thank you so much for tuning in.